good morning.
Hi, good morning. How are you?
Yeah, I'm fine, and you?
I'm pretty good. How do you feel today?
Well, I had a little sleep. I didn't sleep well.
All right. And why? You were working late last night?
I was working last night.
And how was it?
Yeah. It was okay.
So,
Not bad.
you sent across some charts? Let's have a look.
Yep.
All right. You at home?
Yes, I'm at home.
Okay. All right. This is the entry that you have taken.
Yeah, I tried to take a buy from there.
Which pair is that? Euro dollar.
Yeah,
All right.
it's $0.
And now explain me. Explain the reason behind this trade. The best you can.
I saw that previously there were two. There was a previous pin bar reversal
Okay.
at the first 4 hours,
All right.
which tells us markets might it's likely to pull back at that time, and that area looks like an area which the market has previously broken. If you look backwards,
All right. 15
it
minutes.
looks like,
That's Euro 15 minutes, right?
yeah.
All right. Let's go back to your chart. All right. So you basically end up going with the formation of the candle, pen bar.
Pin bar, yeah, the first one, and then the same thing is likely to come up again.
Come back again.
And
All
at
right.
that point, there is a good.
Yeah. At that time.
And at a different point, if you go backwards to your chart, you see that at that exact price, to the 4 hour, it's 4 hours chart. I was looking.
4 hours.
Yeah.
But
Yes.
here it says 15 minutes. This
It was the chart I had was 4 hours. Sorry.
okay.
Yeah.
4 hours.
Yeah. Sorry.
You went in with
So the price I sent to you at the screen, that it was looking like a resistance, which might possibly hold, and then you can see the previous candle was a pin bar reversal.
pin bar reversal. Yeah.
So I tried to look for my trend line from the top
This one.
of here, and pick it up from the bottom of the break of that up candle, taking it down.
So something. If I copy the same thing here,
Yeah.
that would be taking it from here, right? And
Something like that.
bringing it down. All right.
Yeah.
My question is that, what is the particular reason picking a candle like that?
I
You
was
started
looking
from
for
here. You have one
Yeah.
connection here. You had break, and then re-entrance back. Of course, based on this trend line, this becomes a good buy. Here, you go short, and gave you maybe few pips before it started reversing, so you end up going on the long side based on the trend line that you have. So you got a pen bar here on the base, so more than reluctant to go long. But my question is that, why do you pick a trend line now?
I was looking for the intercept, and I was looking for the reversal of the market, and based on the news that are coming out today for the pair.
Okay, all
I
right.
was looking like there might possibly be a reversal.
Okay, let's see if we can do anything different with the same concept. Let's say you're trying to figure out if there's a support towards this region, right? Let's just see if we can find something in parallel to that, right? So if I would have done it, if I would have done it, I probably would have, initially I would have taken this and hit it back here, right?
Yep.
Again, the concept is streamline. At times I will use also trend lines where there is some choppiness to it, but there will be a very good reason behind that. So normally I would have done this, but what I'll be looking more profoundly is this trend line which I have already drawn here. All right, and here you can see basically one test gave you a short signal, hold gave you a short signal, and then short lift and higher. So probably this is what I've been trend line like this. These are stops in reverse, right? So maybe stop somewhere around here and got a reverse, unless you were waiting for a retest, which never came, not till close to around here. You had a little bit of buying before it broke down and gave you a short signal again. But every time it's broken on the higher side, it has broken clean, right?
Yeah.
And there was a lot of force attached to it. You can see right on the 4 hours candle, there was a lot of force attached to it, right? It went substantial distance, right?
Yeah.
It broke down again. There was a force attached to it because here it just broke right close from the trend line. Here it's been, I would assume, maybe about 75-80 pips before it broke and carried on another 30 pips. So this is about 110 pips on a candle out here. So then never got a clean retrace and then head back in again. There was a force out here. So every time we are close to this trend line, we can put down one assumption, and that is whenever this is getting done, right, there has to be stop and reverse attached to it, regardless of the direction that you're picking. So that gives me enough weight that this is a good trend line, but I also have an assumption then that these are some strong points. And how do you know these are some strong points? Because apparently it came close to here, after breaking, putting in a top, coming down.
Yes.
It almost, what do you call that, did not exactly touch or test it. If it would have been close to like 2 pips, 3 pips, and then gone back higher, I would have still considered something like this trend line, right? This one, it almost came down to it. Similarly here, when it broke down, it never got a clean test, right? Here again, it barely broke down right on the threshold, right? So that could be an indication that this trend line maybe to an extent is wearing out, because there's been quite a lot of tests so far, and every time it's been broken with quite a force. Anyways, it closed barely under to the trend line, hit down a spike, continue again, never got a clean test, close to it, never got clean test, and then it started the descent. Another thing to be noted out here is that rule of breakouts, the good breakouts are when they break out, hit the top, right? Let's say this was a breakout on the higher side, hit the top, swing back, retesting the trend line, try to go back. It did not take out this high. From here it dropped in again. There was a news factor, dollar briefly started losing ground, and all the major USD pairs, they ended up rallying up. It broke back again. It did not take out this high, right? So one way to put it this way, that from here onwards, it's been a lower high, and then we started the up march from here. We went lower, so lower low, again lower low. So one way to put it is that the direction is on the lower side, right? Till the momentum changes, till the fundamental changes, till it shifts gear. So what we discussed yesterday, based on that, this becomes my concrete trend line. So I'm trying to find out a linear trend line has in, now I need to put down my channel. As I told you yesterday, everything is all about channels. So today I'm going to start explaining the pick of a trend line. The pick of a trend line is linear. It's a linear base. It makes sense to you that even if you do not, or if you're trying to teach somebody who does not understand the concept of trend lines, you can show them physically right on the chart, and it becomes easy to explain what I just explained you, that concept of breakouts, how you play them, and what are the points that you're looking for. A good breakout here means after here it should have at least posted a new high here, somewhere here. Let it be a minor high, let it be a new high by 1 pip to this candle, but let there be a new high. It was not to be, right? So again, test, fail, and where we are right now. So if I have to put down a channel based on that, I'll try to duplicate this and see where I can find a good test that I can put down on as a baseline. So normally the last candle here, yeah, this is something that I can go with. All right. So once I got it, I try to put manual trend line, because what I believe is in manual trend lines. So yes, there is a support, but this one is not exactly what I consider very linear. Not like that. It's more clean. It's more clean. The only time it end up throwing up some spike was right here, but that's understandable because we closed right on the bottom. So there was an equal force on the higher side, equal force on the lower side. Apparently, if you judge by the patterns, if you judge by the higher highs or lower highs and things like that, then you would have assumed that this high was not breached, came close to it, gone down to the lower side. So yeah, the probability of the lower side winning is substantially on the higher side, which it happened. So coming down, we're matching to this trend line. Now this is something that I can use it as a reference, but because of some choppiness, I'm not exactly more than inclined to pin it down as a proper trend line. So I'll see if I can make it better, right? I'll see if I'll see if I can make it better. So this is just an attempt. I might be, I might not be. So let's see if we can do something. I tend to go with something that is more linear. That is more straightforward. So this is probably another test that I can come across.
Yeah.
From here down to here, and then I delete this trend line. So now if I combine both the trend line, and I'll tell you the concept behind, becomes something like this. That's mean I've got two variants. Proper would be this, because I'm actually having a candle, I'm actually having a bottom, right, as compared to this one, right? But I understand it's got some spikes here, it's got some spike here. Regardless, I can take an entry here, right? But with an assumption that there could be spike, there could be could be spikes on the lower side. I have another trend line, that's last trend line that I can probably find out, right? And if I'm buying from here, that's been my shot. My stop is very minimum, and probably hiding 8, 9, 10 pips below this trend line, and I can take a chance. So let's say I end up taking this chance and I started going long from here. What would be my base targets off from here? So the only thing that I can look for is this trend line in conjunction with probably this one out here. So I'll just see. I'm looking for something that close by, in terms of I can take some quick take profit, or something that I wanted to break, and preferably close on the higher side, so I can start setting for probably a retest back to this thing, because any move on the higher side needs to be towards 109.80, whatever the trend line this is coming. I would assume close to 109.90, right? So from depending on where the price is right now, that's about 100, 120, 130 pips on the higher side. But probably what I need to take out is this high print, right? So this is one way of doing it, finding what you require for your trade to be successful, and or where you think it's more than enough, and I need to cash out, and maybe if it starts breaking on the higher side, I'll jump back on the longs again, or I cash most of my profits here, right? Leave a smaller portion on, and if it closes on the higher side, then I continue with the same direction. Or what you can do is you can go and try to look for some other angles, so I can use this, but then there's nothing more, in terms of connection. Normally there's, I just join one bottom with another bottom, and I do not exactly have any test to, go by, apart from it just broke under. So I cannot be sure if this is a good trend line, if it's going to come, and if it's going to hold. Probably about 109, 20, 25 zone, but I can see there are some bottoms are here on the 4 hours towards the same angle, right? So automatically it tells me that if I take out this high, this probably I need to take out this zone also, otherwise I can see some swing moves, some zigzag pattern between let's say this top and after marching here. Indirectly what I'm trying to say is that the march higher can come, but it probably won't be as easy as we might be thinking. It might just take a lot of time of dull movements, small ranges before it probably again break on the higher side. But regardless of that, what you have painted, what you have done is nothing more than a channel. You know what I mean? What we discussed yesterday is all about the channels. It is all about the channels. Now, the bigger the channels, the better it is, because it gives you enough proximity and enough reasoning to stay in the trade. And let's say the channels are substantially bigger, as in 600 pips, 700 pips, 800 pips, then you look channels within the channels, or within those channels you look for other patterns, other formation that can assist you with your trading, and how you go about it. So this is a channel. Let's say if I can do something better on euro on a different time scale, right? So right now I'm focused that there is apparent support towards 108.50 handle, so plus minus 5-7 pips. So let's say 108.43, 108.55 is something that I'm looking in terms of support. Can I find a totally new angle towards that zone? So that's what I'm trying to do. Now what you did on your chart, that was probably something like this, right? You did something, I think, yeah, you came down something like this, right?
Yeah, something like that.
But let's see if we can find another fresh angle. That's mean, nothing to do with what we've done. Suspecting that there's a support towards here. So now I'm not sure, but I'll start seeing that, on how I do it, if I can find something.
Something like that.
Yeah, I can use it, and the reason I can use is that I have a test, I have a small retest and a confirmation that it held till it broke. It held. It started breaking here, but pretty much closing on the higher side. Then came back and retest here, right? Got a bounce, and again it's retested, right? So I can say that there is a support down towards here on a different angle, right? The only thing that tells me with this patchiness out here, right, is that I can expect something similar out here. That's mean this seems like a stronger zone, but every time, see that. Now how you need to start looking at it, by the time we were connecting here first time, the level was 109.60ish, right? then it
Yeah.
dropped down to 109.48, then towards 109.40. Retest came in 108.90, 92, 93, right? Apparently going down, but it is continuing going down. See, the only way you can trade this is if you end up getting a strong bounces. When you're looking at support which is declining or resistance which is inclining, then what really helps is that once it starts testing, start holding, it needs to give you a strong bounce, because if not, it can go maybe 20-30 pips higher, it can again come back and hit a new low. So it
Okay.
becomes very difficult for you to amend your stops and actually see it moving in your direction, because let's say if your stop is 10 or 15 pips on the lower side, if you go by the end of the day and it's still out here, then apparently the support comes down to where your stops are. You know what I mean?
I get. Yeah.
Same thing happened with Aussie Japanese yesterday. You remember? The same thing
Yeah.
happened. Same thing happened. I'll show you. I actually started tracking it, and Aussie yen. You see that this is where we hit or try to go short, and I had where's yeah, Aussie Japanese. Okay. Yeah. If I go on a 5-minute charts, this is where it started off, right? Yesterday. It started putting in a channel. Started putting a channel. Something. Actually, this was better. So our entry was coming in 109.60ish point, somewhere around here, right? 61. It gave a first decline and it pretty much held to it, right? I mean, it made a connection, then started going and triggering 65, then forming a channel, started staying within it, but it kept on inclining. You know what I mean? So if I went short somewhere here, then my short-term direction was based on this trend line and maybe stops a few pips on the higher side. But the problem with this is that if I had a stop loss that was 10 pips higher than 71 or 72 or 73, let's say 82, 83, apparently it kept on inclining because every time it was hitting the lower side, it was getting a bounce, right? So I would have probably stopped out here towards here, but it is still within the zone. You know what I mean? It is still within what has been started implying it. It started piercing it, but apparently every time it managed to close under, right? So it was almost a no-brainer for me to keep adjusting my stop 5 pips or 10 pips every time, when the trend line is inclining, after every 1 hour it is like 5 or 7 pips higher. It's no-brainer. It makes no sense to me that I need to keep shifting my stop on the higher side, because for all I know it can continue all the way till another 100 pips on the higher side. You know what I mean?
Yeah, sure.
So what we do is that when we look at the chart that we went short in with, right, and we see it getting a close on the higher side, and then again at the same time when we see that the smaller time frame is also inclining up, then I know I'm already, the price is closed higher than what I was expecting it to close under to. Secondly, the channel is becoming steeper, and every time it's hitting the base, is giving a bounce. I need to cut my position off. Let's say break even -2, -3, -4, -5, as close to where my position is, and simply wait for this trend line to break in. If I'm still persistent with the short, I'll just wait for it to close under, and show me 1 or 2 candles close to it, testing it, failing it, then I go short. Otherwise, this could have taken me, let's say if this would not have broken on the lower side, it would have taken me all the way, right now. Let's say it was still playing within the same thing, we would have been, that's quite high. And how I know? Because I started tracking pound Aussie. Remember this trade?
Yeah, yesterday.
Yeah. At the same time, since this thing got triggered, I was having an Aussie chart also. You see what I mean? How was I tracking it? So this told me enough that I need to get out. I need to get out and wait for a break under. That if I still want to go and stay with the shorts. Stay with the shorts. So trendline based analysis, what it does, it shows you the point, where to enter, how to enter, and what to expect based on what things are doing, right? At the same time, it allows you enough reasoning, it allows you enough space for you to make a sound decision. That means we do not carry bias. I told you yesterday, right? When you're doing trend analysis, you do not carry bias. You simply do not carry bias. And the reason is that when you have based everything on these lines, because these lines probably to somebody else means nothing, but to you it means everything. And the reason is that you started confining into this trend line because you think the method that you're applying to has worked again and again, and it's most likely to work in the coming future or at the current position. And if the setup is failing, then you need to get out. So of course every day I can tell you to an extent, but one good habit of trading this is that you have another smaller time frames attached to it. What I do is not necessarily 10 minutes, but I like 15 minutes. Right, I like 15 minutes. So maybe here, yeah, this is, so when you start hitting and again hitting back out here from again and again, and another strong indication was there. This was probably the top, and it started breaking the top also, right? Start priesting is enough indication for you to get up. And if you still want to maintain the position short, then wait for it to break underneath to go back into it. And the reason is that it is inclining. It can be anywhere. Let's say it can be anywhere. And imagine being anywhere and a steeper channel. What if it ends up breaking on the higher side and stayed a couple of candles, 2-3 candles on the higher side? Then I know there's another huge 50-60 moves coming up straight on this pair, right? So there's no need to be get yourself stuck in despair. Apart from that, you just get out. So with the same example, this is what we thought was a breakout and initial soft target. So with the same thing, when I start closing under here, this was again your point of entry to go short. This was your soft target, not your optimal target. So now right now we're coming and we are almost trying to retest the same trend line. If we fail here, you wait for a failure here, right? Then you can go short, and your next shot will most likely has an 85-90% chance it will break this low and you will hit about 90-80 or whatever the level is around to here. Apparently failure here, break under, opens up for this test. This is how our
Okay, yeah, now I understand.
And
something.
what this is, if it fails here, what this is, this was a fake move. You always say that there was a fake breakout, there was a fake move. Market events sorry, market went and went into 8 stops. This happened, that happened, and the reason is nothing more than there's an overextended move. See, people, these are fakes. To me, these are overextended move, and one of the reason was that it's on the Aussie dollar. You can track this pair with this pair. This was the call in the market for the day, right? This is an Aussie. This is an actual call for the market for today, already been played out. So that was break, close, short, profit to this trend line. All right, aggressive mode, buy. Fails here, back to here, short for new low. Goes higher, this is long. So if this zone, roughly I would say 73.85, 73.90 holds, Aussie will come breaking low of this, and we'll see new lows, right? Aussie holds 73.85.
Can you come again, please? I didn't get that.
Okay, I want you to read. Can you read this?
Yes.
Read it.
The two.
Let me do it for you, and I'll explain. There are two distinct breaks on the pair, right?
Okay.
Dotted T4.
Yes.
This one.
Yes.
And it started from here, hold, slight pierce, perfect hold, almost hold, and then immediately break, right?
Yes.
And T3. T3 is basically support, turn out to be resistance here, right?
Yeah.
Broken, support again, right? But it was only for a very short time. See, the actual target of this move on the higher side came down to about 74.65, let's say 74.70ish, and
Yep.
this is a major break point, if you can see. You see how streamlined it is?
Yep.
You see how streamlined it is? So if it's breaking, this is a strong statement to me. This is a strong statement to me. It breaks, and on the same candle it breaks this range also, which was support, turn out to be resistance here. So it broke. It's a strong statement. So if ideal scenario here, retest, you always buy, which is a buy, which ended up being a good buy. It should have gone till here. The retrace should have come down from here. Apparently it came within the same, right away. So this is an overextended move. This becomes your fake move. And how do you know it's a fake move?
How?
It's closing back under to what was support, what was resistance, which was streamlined, and which acted beautifully twice here before failing under. So if it touches 73.85, 73.90, and it starts holding to it, then you can be aggressive and you can hit shots, right? But with a small stop loss and a reverse policy, that it needs to close this candle by the end of the day below T4. It does that, you will see.
So at T3, does it not become the resistance if it holds?
Yeah, it is. That's what I'm saying. If it holds, it will become a resistance. That's why I'm indicating it to hold. This becomes your point for entry to go short. This
To
becomes
go short.
short, yeah, because right now this and this both are your initially resistance. Now when it came down here, they both became support, right? They both became support. Now this is a support, but this is turned into resistance. Now you have a fight between T4 and T3. Now from my point of view, these both trend lines, when the price was hitting the high of 72.25, 74.30, right? These both trend lines were resistance. This both trend line became support. You always take the one that is lower, because that gives you more confidence, because you can be closing underneath, but you can be start holding here. Apparently the price, let's say within the next 24 hours, the price eventually will broke either under T4 or break higher to T3. It cannot be a third option, can it be?
No, I don't think so.
So now,
Something must happen.
exactly. And we have an ADP numbers coming out later tonight, so you can assume there will be a breakout. And how do you play that? Of course, now if this low breaks or 73.30 breaks, this is the shot, and I can tell you it will be a brutal shot. I have no doubt why it won't come, and probably, this is just a rough sketch. Why it would not come and probably test down 72.60 zone, but I would assume it will break it. I would assume it will break it. Maybe not today, but eventually it will break it. Within next 24 hours, it will break 72.60 also. I'll put it this way. But as of right now, this if this is a fake move, out here, right? That's means 73.85, 73.90 holds. It starts holding. If you're aggressive, you can go short with the mind frame that it will break under here. And normally how it would do it, I would assume it will wait for the ADP news before it does that. So on ADP, either we will break T3 or we'll break T4. Very difficult for me to state which way it will break, right? From this point, from here right now, it can be a buy, it can be sell at the same time. Or if you want to play safe, my indications were, which obviously was an easy setup, was to short on the break under, profit here, show aggressiveness, buy here, take it back to here. From here, either if like we have already bought from here, close to here, we'll take out most of our long, and small will be left in case if it can break on the higher side, right? Else I'm opting for on ADP, leave an entry that if it closes start breaking under, then just to go short. But if you're aggressive, 73.85, 73.90 starts holding, you can attempt a short if you want to. But of course, I'm not telling you to go short here. What I'm saying is that when you start reading charts and when you start conducting your own work, this is what you will be looking for. This is a bit of a complication out here. Firstly, you have a big news event. Secondly, it came back, it retested, it broke under 1, but it held towards here. So you're still in a dilemma whether it's going to go on the higher side, whether it's going to go on the lower side or not. But still, there's about 40 odd pips on the lower side and about 40 odd pips on the higher side to be taken. And after that, I think it's best to wait and see it out. So if 73.85.90 holds, you can rest assured. That AJ holds. Where is it? You can rest assured that AJ holds probably this zone right here. That means this in fact is a fake move. Then the next move down would be a fast one, because I can take this out. This is a channel that it was before. It momentarily went on the higher side and came down on the lower side. So let's track what we did on the pound. You saw how it did yesterday, right?
Yeah.
Actually, it was right here. Still, pound overall is still missing a direction. It closed under, went and took out this low, but there wasn't exactly too much of a flow going on to the pair. And when it's the same thing. This is the same concept. See this? It broke, hold, drop, come back, almost came testing to it, and then again, these are the break points. When they get recaptured, the next moves are faster one. And I think what we did was on our 4-hour chart. Yeah, this is what we had the original sketch, right? That either it breaks on the higher side or it breaks on the lower side. So in 20 minutes we have a news coming out, right? Still the main support is out here. So right now I think we'll just go with this thing. Use a bigger span because there's a news coming in. So if it
Yeah.
breaks about
10
maybe,
minutes time, I think.
yeah, if it breaks 56.20, then the chances that it will take out these highs also, and you know it can move towards 57.20, or it can again spike here, hold, and then hit back here. So for today, if it comes down to 54.95, 5500, that's a good buy point, at least for right now. And we do have an ADP report coming in, so that's something that needs to be looked on too.
Yeah, and that's
I
and
think,
usually during the non-farm week,
yeah, I want you to see
market
this.
market is something else.
Normally ADP sometimes it can really, it can really move the market big time, more than probably
More
NFP.
than the non-farm. Yeah, yeah, yeah.
This is one
That's
chart
right.
I was watching on Euro Swiss franc. And to be very honest, I was not thinking that it can, it broke out here. These two are beautiful candles. Since you're going on pin bars, you would have loved these candles to go short. And I was actually expecting it to drop down here,
Yeah, because it was a perfect pin bar.
And this is an 8-hour candle, and you got two pin bars out there. And I actually thought, that this breakpoint could get retested, but it decided not to. So this is an indication of dollar bulls, and
Yeah,
I had, because I actually, I'll be very honest, I started looking at the channel wise between this T4 and T5 being a channel, and this is a median, or let's say T4 to T3 is a wedge. So I was actually expecting it to break under yesterday, and I was actually, thinking that we can break and probably stay under, and by NFP we've already tested T5, and maybe with NFP we rise back again to hit the top
yeah,
of the. So when people are normally looking at it, they look at it at wedge, but whenever you see a wedge, right? Whenever you see a wedge,
what is a veg?
okay, wedges. There are two types of wedges. It's a formation. You know what is inverse? You know what is head and shoulder?
Yeah,
You know what is inverse head and shoulder?
yes.
So these are pattern. These are formation. Again, this is a formation on the chart pattern, right? That gives you hint. A wedge is nothing more than it starts off expanding. This is an expanding channel, right? And as it proceeds, it is contracting. It is decreasing in size. You know what I mean,
Yes.
right? And
So definitely according to that, it was supposed to break
exactly,
that.
exactly. What it suggests is that the price, indirectly, it hints you that the price started consolidating within a channel, and the channel is decreasing. Now these are two types of channel. This, since it's it's inclining, we call it ascending wedge.
Okay.
That the wedge is ascending, is shooting on the higher side. The characteristic of an ascending wedge is that it breaks to the lower side. You know what I mean? Now,
Yeah.
similarly, if this would have been shifted down, let's consider, for the sake of example, let's consider we have that's an ascending, so we need to have a descending wedge. Let's say we have something like this, and we have maybe something, no. Let's say something like this. Actually, this is not a wedge. What I've done is become a triangle. It's the same concept, but I'll show you when there's a live example in the market. I think that explains the best. But where's that again? We're doing it out here. Where were we looking into it? Were we looking on pound chart? Where has it gone? Can't find it. Anyways, the characteristic of ascending wedge is basically it breaks to the lower side. But sorry, yeah, I got it. We were looking on the dollar, not on the pound. Yeah, the crest. This, what most people do is they start looking and always start looking into a formation of it being a wedge, ascending wedge, that it will break lower. But what they fail to understand is that this wedge becomes a part of this channel, right? T4 and T5. This is the main channel for the, and this is inclining, so it's a bull channel on the dollar. So it's nothing more than an impression that maybe dollar is ready to break a bit on the lower side to maybe smooth up the overbought conditions, right? So I'll probably end up looking in this way that just a little bit of correction here, right? Because if I can just look at from this chart that one test, a couple of tests, the bounces are shallow, but again these are only minor new highs, so it should have broken on the higher side, or it should be breaking on the higher side. Maybe one of the reasons it's not doing is that it's been heavily overbought, so maybe it's time to release some, maybe smooth up the overbought conditions and come down to a point where it can lure more buyers into the market. So this is just a formation that tells you that once it starts closing underneath, starts holding it back to it, then it needs to come down here. So it does not, most people start thinking that the pair is going to dip or it's going to go much lower, this and this, but what they fail to understand is that this is still residing within a channel. Most of the time, almost every time when I have spotted wedges, it's always been a part of the channel, not the main thing. See, the channel is T4 and T5. In between I can do a lot of things, but that does not mean anything but me trying to find out some positions or trying to gun down some points for my reference.
Okay, what if the price breaks the T5? Do you assume that there is probably a change in trend
then
to the downside?
I can assume if you start closing a couple of candles and retest fails, then I would assume there's more on a correction. Then I would assume there's more on a correction. And with the news like NFP coming down on this, right?
Yep.
So you can see, it has enough power on the NFP, and especially with the assumption of Feds, they're likely to raise the interest rate. It would be interesting because I think if people are totally gunned down towards expectation that their hikes will come up in September, and most likely there will be more to follow, this needs to break. And I mean, next, if not by NFP, the next week we need to break higher than that. If not, then I think dollar is due for a deeper correction. So as of right now, I'll, based on what I've seen, my bias on dollar is bull. For the last almost a year, I started talking about the dollar when the dollar was hitting new lows. I had a layout, and I'll see if I can find that. I cannot remember. I think it's posted on the LinkedIn. I did a layout where I indicated that there are 3 to 4 hidden inverse head and shoulder scenarios, and the lows that we were trading currently, these are the lows that can maybe for today or within this week the lows will be done, and we are looking at very big dollar move. So, and those were actually based on patterns. It's difficult for me to explain right now because when we come down to it, of course you would know, it will make more sense to you, but apparently these are the hidden patterns that you've seen it so many times before that when it starts appearing, then where to shift your position to. And as of right now, I fairly think another 4 or 5 months or 6 months again is dollar bullishness. But I reserve my concept that I can change those views, because as of right now I see no different than dollar actually going on the higher side. And one of the reason would be a layout that was done a long time back, and I'm looking on a daily that there's a breakout. It's just that we are playing dead within this zone. But if you're looking at the bigger picture, there's enough of the room for the dollar to move. There's enough room to hit new high. Maybe after hitting that high, it needs to retrace, maybe back to 1190. That's a different story. I'm not going to get involved with that right now. When time comes, of course, we will be discussing bigger pattern and how we do it. But you see, this chart was done almost about 2-3 months back and it's still valid. So what worries me is that there's enough room on the higher side, but you see how steep the move is. So coming down here, I'll start, if we can hit the new highs on dollar, I'll be cautious that there's a retrace coming in. But let me now, since I started up, I'll start discussing a little bit more. Consider this, another way to consider this is that how do you work with hidden patterns? It's like you look for characteristics, right? I can take it as a head, I can probably take it as a left shoulder, I can take this as a right shoulder, and this is a neckline right here, right? So eventually what it tells me is that I can still do this, but I have to do something like that. Here I'll be cautious, because even though it might be a neckline, normally with first top of the left shoulder has 1, 2, 3, 4 almost tests are here to the neckline. So this could be gravitation here, 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 then maybe back here, then one last failure here before either it breaks up or fails and goes down. So that means it could be another, it could be another what do you call that, 5-6 months before it actually ends up doing it. So I don't want to get involved with this thing right now. I don't want to complicate things, but rather keep it more simple, that we start with what is easy and then we gradually proceed. So you see how you do it. You see what your trend line, you can do 1001 trend line. When I started off initially, I kid you not, if I remember correctly, when I started doing it about 10, 12, 13 years back, my one page would have at least about 100 plus trend lines, that if I try to show you, you will tell me, okay, these are insects roaming around on this page, right? And what I started doing was, thousands or hundreds of trend lines, and then, okay, I don't like this, take one out, I don't like this, take out. In the end, still I'll be left with 30-40 trend lines. And 30-40 trend lines, and I would not be, I would be very hesitant in taking any one of them out, because to me, everything was making sense. You know what I mean? But that was me starting off working with the trend lines, and I did not have any teacher. So I had to take the harder road, right? See what the prices are doing, and then coming back to the same chart after, I was saving trend lines, I was saving those lines, and on files, and going and looking after 2 days, 3 days, 4 days, putting down notes, what is the effect. So it took me a very long time before those, out of 100, then scan down to 40, from 40 then scan down lower to about 20, from 20 gradually scan down to 10, from 10 gradually scan down to 5, 6, and now you give me any pair, any fresh new pair that even have never done it ever in my life, exotic or any other pair like that, it'll take me maximum 4 or 5 minutes to do a layout on daily, on weekly, and on 8 hours and 4 hours and 2 hours, and I'll be ready to take position on that pair, because I have spent enough time. I've seen what market's been doing again and again, and I've been able to, put up a system that allows me to take my positions and work accordingly on that. It's just that being a human being, you're limited to what you can do or the time factor that you have. It would be a blunt statement, but it would be a correct statement. If I just do a layout, and I actually do a layout on 8 to 10 or 12 different pairs, and I can finish all of them in about half an hour, 45 minutes, right? If I don't have to put too much commentary on that or too much explaining on that, if I just put my charts on the table, that is only for me, I'll be ready with 10, 12 trades to go on a row. And all I need to do is that place my entries in such a way that when they get triggered, right, I take 5 or 10 pips and I close them. I can hit, maybe out of 10 trades, I'll go 7 to 8 trades in profit. I can do a run of 50, 60, 70 pips, and most of my trades will get closed in about 5, 10, 15, 20 minutes. I'm just going in for scalps. But that's good in theory. In theory, but in practical, it is not that easy. And the reason behind that is that we being human, we are limited to what we can do and what we cannot do. And the reason behind that is that, again, being human, I always go with emotions. There's a part of me that goes with emotion. I get scared, or I get too overconfident. And that's one of the reasons that
It's that psychological trigger.
exactly. Well, one way for me to do is that have an execution traders, and not sitting along with me, and I pass on the instruction and they carry on the work on the other end, which allows my mind to stay free. Because if I start taking the pain and the sweetener that comes with taking a trade and watching a trade, then if I take a trade here and I start watching it, then I will not see what's happening on the other side, on other pairs. Excuse me. The sole reason is that I'm getting attached to the trade out here, and that's the reason that is the best I can do is do the trades and pass it out to others to take a trade on that. But right now we are not discussing on that. We're only discussing on how I do that. And how I do that is by keeping things very simple. And again, you can match this with the Aussie dollar. If it's breaking out here, that's mean Aussie is rejecting 73.80 zone right here. So probably can gravitate between this one by the time NFP comes in, and then we'll see how it does from there onwards. So let's see. I want to take some time and let's see what we can do. Let's take a random 15-minute shot and do a channel on it.
Long candles.
Come again?
Said this the prices the candles are really long in this present candle for 15 minutes.
Yeah, it does look like it has probably breaking the range from here. Let's see if we can find something. This looks very choppy, but let's see. Right. That's your son or daughter?
My daughter.
Okay. What's her name?
Joy.
Joy.
Yeah.
Very good
Joy.
name. She brings in a lot of joy to you.
Yeah, sure. She's-
How old is she?
She will be 5 soon. By December, she will be 5.
My little one will be 5 in next month, September 14th.
Wow.
Yeah. So
That's really great.
kids are joyful, blessing. And
Yeah, children are blessings.
true. So this is a channel that I have on 15 minutes. Again, and how do I explain that is that, I'm focusing more on this trend line. This is just a parallel that's taken down here. This is a 15 minutes, so there will be a limitation on how far I can go on that, right? So
Yeah.
for example's sake, I'll leave it to I'll leave it to this, you know, just double up on that here. And the reason being, I've got this close under right here, and a touch here, and I'm just leaving it like that. My main trend line right now is on, focusing on that. This is the same assumption of what we're seeing on the Aussie yen, right? That the move above being a fake, came down, retest, failure, then hit some decent lows, but did not take out the last lows. See, when you're looking at the breakout, what is most important is that when it takes a test, right, it needs to take out the previous low or the high from where it started off. If not, then there's something wrong. If something wrong, is this wrong? You know what I mean? This is what
Yeah.
is wrong. I mean, the news factor came in at 1:30. Sorry, about 11 minutes back. That's a different
Yeah.
story. I'm not debating on that. I'm just debating in terms of what trend line tells you. So when it's failing here, start going. I mean, till it was here, you're still under assumption that it can probably post back and you are low. And of course, the news is coming in, decided making in, then this is where I would have got cautious, and even before the news, it ended up closing on the higher side, and then you know news came in on this candle. So 1, 2, 3, 4, that's 1 hour, almost about an hour, 15 minutes earlier, it ended up closing on the higher side. It's already indicating that there's a shift in balance, and this probably is not a fake breakout, right? There must be some news or something like that that provoked the initial response. But again, give respect, because this is only a 15 minutes. This is only a 15-minute chart, right? So now, if we get a retest here, start holding here, then you got a probability of going long again on this chart, with the assumption that it can hit a newer higher than this. So this is how you make your trend line works. This is how a channel works, because channel gives you all the proximity, what you need. It gives space, it gives room, it sheds light for the price to keep on traveling, unless they're broken out. Then when they are broken out, then you go and do accordingly. So my emphasis has been, and always is when you basing yourself on trend lines, you have no room for bias. And if you have room for bias, then you could be, you could know everything, but you're not being able to utilize it properly. And that's
Yeah.
even worse. It's like somebody who is very highly educated, done a PhD, master's, double master's, MPhil, right? But at the same time, he's ignorant. That's how I would portray it. You need to, I haven't discussed, or we haven't talking about, whether how strongly do you carry bias in your trading, or how you conduct. But trust me, with trend line analysis, and once you got a good running, once you get a good grip on how you do things, right, you won't have any bias. You probably end up laughing to yourself at, why was I thinking I would do, or hold on to this position, this and that, this and that. You will not do that again, because your mind would have developed, it has been brought up. And with trend analysis, you do not have any concept of bias. And when I show you example on a smaller time frame scale, right, it's just for a reference, it's just for to show practically. But most of your works, my advice is that minimum time frame that you use to conduct your trading is 2 hours. And if you can start conducting your trading, or you put your finding on 2 hours, 4 hours, and 8 hours candle time frame, you have the best. These are the time frames that will give you the best outcome, because they carry less noise. Optimum time frame would be
Yeah.
4 hours. But lately, when the market are congesting, not too much of a movement, then 2 hours does well in pinpointing and pinpointing the direction and pinpointing the smaller moves. Let's say you can find you are looking for 20 pips, 30 pips, 40 pips. 2 hours does well. 4 hours gives you a slightly bigger range. And 8 hours, if you can do it in 8 hours, you got some of the best results. The only problem with 8 hours with the trend line is that it does not give you a precise point, so you could be off by 5 or 10 pips. But 2 hours and 4 hours helps you to actually zero in onto the entries. So I will end the session out here, and I will take a couple more days onto channels. And now that I think you understand the concept of channel better, it's time for us to do more practical work on different time frames on how to start picking trend line. So tomorrow, most of our 80% of our session will go on picking the trend line, and most likely tomorrow you will be the presenter and I'll be the viewer, because I would like you to show me how to do some trend line, and basically show me channels, show me streamline channels. That's what your aim should be. That today you will sit down, it really does not matter 5 minutes, it really does not matter bigger time frame, but just show me channels. I want to see what your eyes tells you on how to spot a channel. And hint, keep it as streamlined as possible. As streamlined as possible. I'll repeat again and again. Streamline, 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 linear. Can you do that?
I'll try my best. I just need to understand.
I do not expect you to be 100%, right? I expect you to surprise me, but I don't expect you to surprise me right away. So do what you can best, right?
Yep.
Because if you do it, only then I can correct you.
Yep.
So with that, have a good day, and stay calm and stay profitable, and I'll see you tomorrow. And tomorrow most likely will be on Join Me. I'll ask our tech people how to because I needed some code that I don't have. Apparently I asked them for updates, and I'll do a mock run myself with somebody from the company, and then tomorrow hopefully we'll be set up and we'll go and do it on the Join Me, because I believe that's proper software. So we'll see how it goes from there.
Okay, thank you so much.
Take care.
Thank you.
Have a good one.
Bye.